Hey everybody, welcome to our specialty vlog today on the CARE Act and SBA lending. I'm Ashley Page, who heads our business consulting unit at Five Plan Partners and also on the portfolio team. And I'm joined by our head of financial planning today, Jay McGowan. And what the two of us are going to do today is summarize for you. There's been a lot of information really out over the last week on the CARE Act and how SBA lending can be used by our owner-managed business clients to navigate through this COVID-19 payroll problem. So the way this is going to work is there are three major SBA programs historically. The 504 loan program, that deals with commercial real estate. That will not be our subject here. And the other two will be the SBA disaster loan program, which Jay is going to cover, and the normal SBA 7A loan program, which I'm going to cover. All of these programs have been in place for years, and it was very smart for the administration to use the SBA as the platform to get this lending money and capital into the owner-managed business environment in the United States. And the main reason is that mechanism was already set up. So the way this is going to work today, we'll start with Jay first. He's going to talk about the disaster loan program, then I'm going to talk about the 7A, because the two of them are being a little bit confused by clients, but we're going to separate that out for you. So Jay, good morning. And if you go ahead and start on the disaster loan program and take folks through that, and I'll do the other.
Absolutely. So yeah, thanks for joining us today. As Ashley mentioned, there's a lot of information out there right now, and we just wanted to kind of clarify some of the options for you as a business owner. So as Ashley mentioned, the economic injury disaster loan process through the SBA has always been there. It has just been extended now to include the coronavirus and the related fallout from the coronavirus. So on Saturday, March the 21st, Alabama's application was granted to participate in this program. So basically what this means is that small businesses can get disaster loans related to the coronavirus through the SBA process like normal, except it's now extended to the coronavirus. Basically what this is, small business owners are now eligible to receive loan proceeds from the Small Business Administration to pay fixed debts, payroll, accounts payable, and other bills that cannot be paid due to the coronavirus. A summary of kind of what that looks like. It's a very quick process. It's a very quick way to get access to funds, and the loan proceeds through this channel can be up to $2 million. Those proceeds are offset by business interruption insurance that you have. So those insurance proceeds would net against that $2 million cap. This is a true loan process where the loan bears interest at 3.75% for small businesses and 2.75 for nonprofits. And that loan can be amortized for a period up to 30 years. Typically, if you have other sources of financing, the amortization period on that loan will be about 7 years. They're typically fairly straightforward as far as the application process goes. And there's also an economic injury disaster loan advance program where you can get up to $10,000 within 3 days of a successful application, and that advance does not have to be repaid. So a few things that you may need to go through if you want to go through the disaster loan channel to get financing to cover your bills in this time of need. You would basically need three of your most recent federal income tax returns, interim profit and loss statement, current schedule of liabilities, and for any owner that has a 20% or more ownership in the business or general partners, those people would need personal financial statements. A couple things to talk about to mention with this is that the borrower will need to offer collateral on these loans if available. And then you also need to show your sales level and net income for the business a few months prior to the COVID-19 pandemic, and then what levels will look like afterwards. And so you can apply online, you can apply in person in the SBA Disaster Center, or you can apply by U.S. mail. This was kind of the first wave of defense that they put out. It was a very quick way to get access to a smaller amount of fundings. Then I'll kick it back over to Ashley to kind of talk about the more robust 7A loan process that has come about due to the coronavirus.
And as Jay was just telling you, when he and I were talking about it, the disaster loan basically is really fast with application direct to the SBA. And if you've got a short amount of time horizon and a smaller amount, that's a good way to go. If you need a larger loan amount to cover payroll for an extended period, and you've got a little bit of extra time from a cash flow perspective working on that, the traditional 7A loan that I'm going to talk about has been around for years with the SBA. The 7A loan historically was used for two main items. Number one is to finance your working capital cycle. So if your business was growing and you needed help with that, like a larger line of credit, that was one. And secondly, to buy term debt. Any type of equipment, if you need to put a 5 to 7 year term piece together to get a different type of equipment to make your process much more efficient. And so those were the two things you normally use the larger 7A for, was working capital and buying equipment. So historically, the way that a 7A works is it's actually a bank loan in this case. That's different than the one Jay just described to you, because that's a direct loan to the SBA. This is actually a loan with your banker that is guaranteed underneath it by the SBA. So that's a little bit of a nuance between the two. But where Jay had a $2 million limit, the normal 7A program on COVID, that just got passed on Friday with part of the relief package that the president signed Friday afternoon. And what that does is that will finance for you, where normally a 7A, you could not use that to finance payroll. That's the big difference. Now what they've done on the normal 7A program, they have expanded that beyond working capital and term debt, that now you can actually support your payroll with that, which was taboo under the normal 7A process. So they've opened it up to try to keep you having your payroll solid. So the amount that you can get under the larger 7A program is 10 weeks of your payroll or up to $10 million. First thing you do is you calculate that, what your payroll would look like, full staff, see what that level is, and the ceiling is $10 million. Also, too, what the SBA has done is they have improved the guarantee level. Historically, 7A guarantees, what the SBA would guarantee the bank was 85%. There's some more complex one we won't get into, but in general, a lot of that guarantee now is up to 100%. What some of the other stuff that Jay talked about normally, where basically you were looking at normal due diligence, you don't have to do nearly as much of that. You really just have to show that you are a legitimate business on February the 15th and that you are going to have some sort of COVID-19 impact. What the Federal Reserve and the Treasury is doing with this, everyone, as opposed to the financial crisis, they're aiming this hard at employment. So what they want you to be able to do with a 7A loan is to also use it to keep people employed this time. And one other provision we will say, or actually two, one is if you keep your employment at full staff, once you get the loan, you can have about 8 weeks of the loan forgiven for you. That is a huge thing to be able to do, but you have to keep all of your people employed. The second thing that's different with the one that I'm talking about versus disaster loan is that you do not have to have collateral or a guarantee. So really all you have to do is to be a legitimate business that was operating on February 15th. You're trying to maintain your payroll, and this is a very open-ended process that you can use, but mine you'd have to go through your lender, take a little bit longer, but you can get up to 10 million with that. So it's
it takes longer than the disaster loan, but it takes a lot less time than the traditional 7A has taken.
That's correct.
They did that so that even if you go through this channel, it'll be a lot quicker than anybody that's out there that's familiar with SBA, the 7A process. It can take some time, but but they have put in place things to make sure this goes through in an expedited fashion so people can get their money. Is that?
That's exactly right, Jay. And also, back to yours on the disaster loan, they've done the same thing. The disaster loan you were describing to our viewers has been also around for years, but the complaint when that was used last time is it was a little bit slow to get the funding out. Now on yours as well as mine, they've really sped the funding up.
Yeah, good deal, which kind of is the whole point of this, is that they're not looking at so much as at credit worthiness. It's like, hey, we're trying to get this money into the hands of the business owners, lighten up the restrictions on the banks making these 7A loans so we can get the money to the business owners to keep people employed, keep the doors open, because we're all having to come together on this. And you know, it's affecting the economy, but this is a great way if you're a small business owner to weather the storm. And they're like Ashley said, they're going to allow you to even forgive a portion of this loan that's related to payroll for up to 8 weeks, which is enormous for small business.
It is. And Jay and I have spent a lot of time already with many of the undermanaged business clients we have at Fi Plan. So he has really done a deep dive on the disaster loan program. If you don't want to run in that direction and you want to go the longer SBA program, I've done a deep dive on that. So feel free to call either one of us on either one of those. Jay is also well-versed on the 7A. I'm also well-versed on the disaster. So feel free to call Jay in our financial planning group or myself. Thanks.
Yeah, if you have any questions, just let us know. We can integrate this and how it impacts your personal plan as well as your business if you're a business owner. There's all kinds, as you know, every situation is completely specific to that person, that individual, that business. And so if you have any questions about how this process works, if you want to know if there's any other avenues that you can take, depending on your specific situation, please do not hesitate to let us know. We're always here to help. Our thoughts and prayers are with everyone that's dealing with the COVID-19 pandemic. We're here all the time to answer your questions. Give us a call, please. And we look forward to getting back to normal as soon as possible. And we look forward to talking with you then. So thanks, Ashley. And again, if you have any questions, y'all just let us know.